Hey, good afternoon. This is Bob from Trade Genius. It's the 21st of December. Welcome to winter. And in sunny California, we're getting rain already, and we weren't supposed to get it till Friday. But it's what happens when you have global cooling. The cloud cover gets thicker, and then you just get these rainstorms out of the blue. And so I think it's going to rain for tomorrow and Thursday, Friday as well. So hopefully. And on the health front, I'm feeling a little better. At least my voice sounds better. Getting better every day, I guess. But what I want to talk about is kind of my strategy for January. I'm trying to do this without getting whipped around too much because I'm not really sure how this is going to go. I'm pretty confident that we won't get a January ramp. And what I don't know is if they're going to try to keep it in a range or if it's going to sell off going into January. And I think I have something that'll position me for both those scenarios to make some decent profit. And how I'm going to do it is that, first of all, with SPY, is that I have a triangle here. I'll show you on my daily. I said triangle, I meant rectangle. As long as this thing stays up around the 220 and higher, it's outside of a 2-year range. The rectangle box of between 180 and 220 here. But if it falls back inside of 220, then we're looking at what I would call basically a failed breakout. And typically then it's going to try to find value back down to the bottom of that rectangle. And how long it takes, I don't know. And so for me is that I'm probably going to be not as aggressive short if it stays above 220, but if it gets below 220, then I'm going to get more aggressively short. And so how I'm playing it now is that I have a SPY January put. I started it last week at 225, and when it was up here. And when it drove down on, I don't know, today's what, Wednesday, I think it was on Friday, I rolled it down to 224, so it took a little bit off the table. And then I sold a 223 short put for this Friday coming and took a little bit more off the table. And then today I rolled that 223 to next Friday. So what I'm trying to do here is I'm trying to take my investment out as soon as possible, but still have my exposure short, and then just keep an eye on the price action to see whether or not I want to hold that short put or let it go. And looking at my my volatility stop here on a daily, and this is my own proprietary volatility stop. And if this thing flips red on me, then I'm going to take my short hedge off. And then when I get below 220, then I'm going to get more aggressive on the short side. The other thing that I'm short now is that I bought VXX in anticipation of the contract rolling, which it did today. But the price action on it was, it should have rolled up last week, but they're just punishing anybody that's long volatility. Now, what I was doing was I was selling calls against it every week, and then also been doing some day trading on XIV, but I don't want to have any exposure, if I can, on the long side of volatility, because at some point I think it's just going to come out of the blue. Volatility is going to start picking up pretty strongly, and so what I've determined, looking back at the past 10 years, is that whenever volatility in December has been weak, in January it's been very robust. So my play is to hold my volatility position. What I'm probably going to do, just so I'm not holding all this margin so I have money to get more aggressive, is that I'm going to flip my VXX position into either a VX futures contract long, or buy VXX at the money or just a little bit out of the money calls, and have my exposure that way. And so that's what I'm thinking about doing for next week. And in the meantime, what I'm going to be doing is, as long as, and I'll bring up XIV here because we put the trade on today, and so as long as XIV is in an uptrend here, as you can see, is that I'm going to try to day trade it, and we put a day trade on today. It's profitable. We decided to hold it overnight, but only a third of position, and let this thing play out into Christmas and into the first of next week. And so right now, going into January, then I certainly won't hold XIV probably at all overnight, unless the market decides that it's gonna take off versus chop and go down. Then I'll make a decision to hold it, because we can go from XIV 50 to 100 probably in a heartbeat. But right now the chart is saying, and if we go back down to the 2 hour, which I'm really pulling my signal from, is that it's still indicating to me that to keep a little bit of exposure on, because XIV has been going up 0.5% overnight, and it's not coming back down to my buy point at the open where I can get a position and go higher. I actually had to reach a little bit today, which I didn't want to, and it turned out for me, but I'd rather have it come into me or start below VWAP and take a position and let it ride up during the day. That's been typical what's happening, but this last couple weeks have been anything but typical. And the other thing that I'm pretty reliably confident is that I think oil has played itself out. And so what I'm doing with my other positions that I'm short, and a lot of people ask me, how am I going to play this short? I'm really going to play it through options, and in case it blows up on me, I'm just going to lose a fraction what I do if I was trying to load up on shorts. And a lot of these short ETFs are, most of them have ultra components to it, and it's just too much to manage. And for me to have a subscription service is that it's pretty stressful on everybody if the trade goes against me and against them, and there's a lot of questions. And I know how to fix trades on the fly, but it gets to be too much for me to help just help everybody in whatever situation they get themselves in. So my preference is buying puts. So I have folks that are in drip right now. I think drip's going to be a good trade. Oil took it pretty hard today. I'll get to that in a second. And I think XLE is going to come down as well. And so I have a 76 put for January on. And I've been selling weekly. I have a 75 against it for this Friday coming, and then I'll make a decision on whether or not I continue that. But I'll probably keep a short exposure on all of these, and roll the contracts down as it goes down, and then try to make money on that. But I'm definitely bearish on oil. I think the whole lie can't be held up anymore. And now they're cheating, and they're openly cheating, and I'm expecting mid 40s for oil. I've said this and said this and said this. And if you look at the oil ETF, that's pretty nasty to me. That looks like a head and shoulders pattern to me. I don't know about you. It looks like it could fall from the 616 area all the way down to 575, 550, and there's some big gaps here to fill. So that's my view on oil, and I see no reason why that scenario can't play out. The other area that I'm definitely negative on is biotech, and two reasons. One, it's high beta, which means that it drives up higher as the market goes higher, on a percentage basis, and I think the reverse will be true as we have a January, February sell-off. And just knowing, you see Trump already, it doesn't take a rocket scientist to figure out that he's going to see all this excess, the profit margins on things that people and governments have to buy, and I think he's going to be jawboning a lot of these guys down, and I think it's going to be very negative for the biotech industry. So, plus XBI, there's gaps here at 58, and I think there's one below that. Let me take a look, and I think there's going to be a opportunity, and so I'm already short. I have the 58 for January. I don't have this hedged at the moment. I'm trying to drive profit on it. Yeah, so if you see here, this is the first gap to here, okay, and then the second gap's down here at 55. So I see no reason why either one of these gaps won't get filled here in short order. So that's my thinking on my exposure on the short side, and then like I said on the long side is that I'll have exposure to XIV, and then I'll be hedging on short puts. So that's kind of my strategy. I think it's a good one, and it would, if we get the sell-off that I think we're going to get in the market, I'll definitely make excess of what I need to make on a monthly basis. And I like to make, when I'm trading with my portfolio, I like to make about between $8,000 and $10,000 a month. So and I want to do this without maniacally trading. And so if I can get away with it, with the market doing some of the work for me, then I'll be delighted. But I missed one more, and I put this trade on. So I have a recommendation for TWM on right now, and then I personally took the IWM puts. Okay, and I think small caps are gonna get back, and we topped here on the 6th or the 9th, whatever day this is, and the 9th, and we failed to make a new high, and it looks like it's ready to roll over again. And if we break this 135 area, or my little dots go from blue to red, then I'll feel pretty confident that we're going to drive down. And all my targets for all these are getting it back down to these daily VWAP areas, and basically reset the year. And an ideal situation is the market goes into some sort of meltdown mode. So that's my thinking for January. Just going to be piddling around, day trading, credit spreads, things of that nature, just to generate income if we stay stagnant. And let me just bring that up and show you is that what has been working for me very reliably, I may add, is that I sell weekly credit spreads on SPY all the time. And so, and I just simply follow my dots, and I have a second set of dots that I use to. Do I go to a condor, or do I take one direction or the other? And right now for me, the SPY is neutral for me. So. If I have blue dots and green dots, I have condor on, and I do right now for Friday, and then I actually have a call credit spread for January, first week in January, and so I'll either be in put spreads, call spreads, or condors, and so as soon as this thing breaks down, I'll cut that the put spread off. And then just run with the put, because it's out 2 weeks, and I'll throw that short put back on again when I get a reversal. So there's a lot of ways to make money in the market, and speaking of which, if any of you guys are interested, got trading webinar tomorrow, 4 o'clock Pacific time. If you're an annual member of ours, all trading always is no charge. We appreciate your upfront commitment to us. If you're monthly, or if you're not a member at all, it's a pretty nominal fee to get training. I mean, what I show you is worth hundreds and hundreds of dollars, if not more. And I think I charge like $29. That's my partner. I don't even look. I just focus on the trading. So it's a bargain. So sign up, Enjoy it. I do training once a month, and going into next year, I'm going to do training twice a month, a basic and a more advanced class. Teach you how to get on the right side of the trades. Anyways, Bob from Trade Genius. Have a great day, and won't be doing a video. Yeah, actually, I will be doing a video every day the rest of the week. Anyway, I'll catch you guys later. Bye bye.